Welcome to the latest episode of Flip the Cap, the insurance industry's premier podcast. I'm your host, Kathryn Smith, and today we're going to explore the rapidly changing world of professional lines insurance, taking a really deep dive into errors and omissions, directors and officers coverage, and also specifically financial institution risks. The game is changing so quickly that it's critical for our retail agents to understand some of the changes happening in the marketplace and what the implications are on your client's insurance needs. On today's episode of Flip the Cap, I'm joined by Michael De Feo, Senior Vice President of Jencap's Professional Lines Practice. He's an executive risk, financial, and professional lines broker with 25 plus years of experience working exclusively in these lines of business. He's an elite group of Jencap lifers where he's really dedicated his entire insurance career to the company, which prior to being acquired by Jencap was NIF Group. He leverages his professional lines expertise to tackle more complex risks, those with financial distress and a capital raising process, anything M&A related, and more. We're super thrilled to leverage his wealth of knowledge today and dig a little deeper into these topics. So without further ado, I'd like to introduce you to Michael De Feo.
Thank you, Kathryn. Good morning.
Thanks for joining us. We like to kick things off by putting you in the hot seat and getting to know you a little bit better.
Okay.
No pressure, but it's always harder to talk about yourself than insurance. So let's start by addressing the letters in the room. And I'm referring to the ones that live behind your name because you have several. Your professional designations include MBA, ASLI, and RPLU, and more. So I want to start with your MBA because that's not something I typically see with an insurance lifer. And you got your MBA really like halfway into your very established insurance career. So what made you want to get your MBA?
Thank you for asking. I think the fact that it's not common in the insurance brokerage industry is one reason that I really wanted to do it. It wasn't something that was really recommended to me from anyone outside the industry. I considered law school because we deal in liability policies every day and we're reading about what type of lawsuit will be covered and what type of lawsuit will be excluded. So I had considered law school at the time. And then I went through some of the MBA curricula and I really liked the corporate finance MBA program. So it wasn't a general finance MBA where I was studying financial analysis and stocks, but these were classes about mergers and acquisitions, corporate finance, private equity, venture capital, structuring companies, how companies raise capital. And it was all very, very directly related to the D&O placements that I was working on, and especially the financial institution placements that I was working on. And it's really helped me. It's helped me a lot throughout my career. A lot of the meetings that I've gone into with insureds, with clients alongside my retail partners have been with either boards of directors of companies that were engaging in some sort of financial transaction, such as a capital raise, or it was a financial institution client. And just having the lingo, having the background really did help me a lot over the years.
Yeah, that's awesome.
Yeah.
So I hear you're a big F1 fan, which I could talk about for hours because I too am a big F1 fan, but I'll ask you one quick question. If money was no object and you could purchase any car, what would it be?
Well, I'm not just an F1 fan. I'm a fan of Team Ferrari, Scuderia Ferrari. And my dream car would be Ferrari Daytona, which is, that's really the nickname. It's a 365 GTB from the 80s. So we're talking about a classic, real analog, real basic, big V12 engine in the front, 2 seats. And that would be the dream car.
All right. You haven't thought about that before, but...
Only my whole life. Only my whole life.
Well, from an F1 perspective, you picked a good team to follow this season. You're also a very well-traveled man. So of all the places that you traveled, we wouldn't have time to get into that. But what's one place that you visited that really stands out as one of your favorite places?
Well, I love going to Italy. And that's a popular answer because Italy is a country where each region you go to is really a different type of vacation. So you can return over and over again. And if that's too general of an answer, I love the city of Rome. And some people don't like it because it feels too much like a city and not so much like a vacation. But I really love it. I've been there a few times.
You could go 6 times and it not be enough because there's just so much to explore and see.
I think that's the beauty of it. Yeah. And you have to know where to go. You have to know where to go to avoid the tourist traps. So there's a little element of feeling like an insider when you do know where to go. Kind of like the New York of Italy, I think it is.
So what do you like to do outside of work?
Outside of work, I'm a big fan of cooking. I'm a big fan of going out to eat in restaurants. My hobbies really my whole life have been different types of martial arts. I'm doing some Brazilian jiu-jitsu. I've trained with the Japanese sword, samurai sword here and there over the years. Did some judo when I was younger. So that's a great way to blow off steam. And I also find particularly the jiu-jitsu is an outstanding form of exercise. So when people ask me why I don't play golf, I'm a big fan of efficiency, and I'd rather do something fun where I'm also getting a really, really great cardio workout as well.
I think it should really be known in the insurance industry that Jencap is just chock full of people
I know.
who are boxing and martial arts enthusiasts.
I know.
Don't mess with us.
Agreed.
We're going to take a quick break, and when we come back, we're going to have Mike De Feo flip the cap. We have all of our guests play, and currently Roman Atkelski and Deb Diaguardi are tied at the top of the leaderboard with 2 tosses. So that's the score to beat. We'll be right back, and we'll see what happens.
Flip the Cap is brought to you by Jencap. Jencap is one of the largest wholesale intermediaries in the United States, with expertise in wholesale brokerage, binding authority, and program management. Jencap has specialized divisions and affiliate companies that provide niche expertise, unparalleled market access, and nationwide influence. Encompassing expertise from every corner of the industry, Jencap is the ultimate award-winning insurance family. Put Jencap to work for you.
All right, Mike, it's time to flip the cap. You're in the hot seat. The rules are very simple. Watch your elbow. Your elbow can't pass the table line.
Let's see that.
I feel sure at some point in your life, you've maybe played a drinking game or two. We'll see. But as you can see, Deb and Roman hold the top spot. No pressure, but 2 is challenging. So we'll see what you got. Let's go.
Let's go.
You got robbed.
Yep.
Well done.
Was it more than 10?
Coming back, we're going to dig into some of the specialized professional lines topics, and we'll see you soon. So let's start by talking about the professional lines marketplace. In stark contrast to the last year or two, it actually is really soft. So how has the softening of that market made an impact in a retailer's need to work with a wholesaler like Jencap?
Yes, agreed. Common knowledge that 2022, 2023, the market has softened. And what that means as a wholesaler is our retail clients are able to get quotations from the direct markets a lot easier than in the past, okay? So we may have been getting submissions last year out of a dire need. They would come to us. They didn't have any quotations at all. Makes it pretty easy for us to write the business. Not necessarily easy to obtain the quotes because the market was difficult as well, but the pricing wouldn't be as competitive necessarily as the prior or the subsequent year, but we'd be able to make the sale there. When the market softens, what happens with our retail brokers is they're able to obtain the quotes directly, and we're seeing a much thinner flow of business coming up to the wholesale channel. The message that we're out there trying to portray in our production efforts is that just because you're able to receive a few quotes doesn't mean that we might not be able to give you a better alternative anyway. So we're not just a market for last resort. We don't just write not admitted and distressed business, although we do. We also write admitted business. And if our retail agent has a quote, it's likely going to be from 3, 4, or 5 direct markets. If you tell me the region that the broker's located in, I could probably guess where they got their quotes from. And that's not giving the client a lot of choice. And oftentimes we can give them a better alternative, even though they have a quote directly. And as well, we offer a lot of expertise in the areas of the coverage, in the areas of a coverage comparison. So if our broker has quotes in hand and we can procure additional quotes, we can really help them understand what quote is better. And we could also help them to improve the quotes, improve the proposals, negotiate terms and conditions at the right time which is prior to binding, not after binding when sometimes the insurer's lawyer gets around to looking at the policy, but it might be too late to really change the terms.
The market is seeing a significant increase in errors and omissions claim, primarily because the coverage is impacting industries that it never impacted before. So in your experience, what's happening with that trend?
Well, I think what's interesting to note is that there are classes of business that didn't traditionally have an available E&O or professional liability product available to them, right? If you think about a professional liability client, typically it's a company that's providing professional services to others. There are companies such as manufacturers, contractors, real estate developers that they may not have clients, they may not be providing services to others, or if they are, you would think of the exposure as being primarily bodily injury and property damage, whereas professional liability traditionally is not bodily injury and property damage. It's a financial loss product. However, the marketplace has developed products for these classes. So for example, a real estate developer, they're renovating a property for their own profit. They don't necessarily have a client, but over the years, it was found that they would have to buy a real estate broker E&O policy, a construction manager E&O policy, a design professional policy to cover all of these operations that they were doing through their divisions and their subcontractors. So a developer's E&O policy was developed to catch all of those ancillary E&O exposures. And then in addition, it picks up additional exposures that the developer, additional activities that the developer engages in, such as activities that have to do with gaining the permits and negotiating with regulators and cities and states and zoning boards. So it's a relatively new product that's developed over the last several years. Similar with manufacturers. You would think a manufacturer doesn't have a professional liability exposure, but a policy has developed that will cover things that aren't covered by their GL products, GL and products package. It might cover claims arising out of the design process that trigger a financial loss instead of a property damage, and it might pick up some intellectual property infringement and some other things. And these can all be negotiated on a case-by-case basis. One more example would be contractors. Again, a contractor's activities are generally P&C operations. However, you could have a contractor's professional liability policy that will pick up any of their design professional activities that they might do through a subsidiary or through an outsourcing. And it might also pick up actual physical work, fabrication, installation, where the GL is not picking it up for some reason, either because there's a financial loss coverage trigger or for some other reason the GL policy is excluding it. So there's all these new policies that have come out that sometimes the clients don't even know they exist, because an E&O sale is often started by a contract requirement. And if the contractor's client doesn't know that an E&O policy exists, they're not going to demand that they carry it, and they're not going to go to their insurance broker to ask for it. So one of our missions is to get out there and work with our retail brokers to make sure that they're educated and educating their clients.
With Jencap always really being on the cutting edge of emerging risks, there are some products that you and your team have developed to bridge this gap that seems to sort of exist in the marketplace right now. Talk about what some of those products are.
So with these emerging risks, what we really try to do at Jencap is we keep up to date with the products as they're developing, okay? We spend a lot of time with our markets. We're talking to them as they're developing products before they come out with new products. We're providing input, and we take a lot of pains to negotiate the proposals on a deal-by-deal basis to make sure they're crafted and tailored for the client and for the actual exposure that we're dealing with at the time. We want to make sure that our brokers are being kept up to date by working with us with the most state-of-the-art products, and we work with the entire brokerage marketplace. We have all the carriers to work with. We write a lot of the miscellaneous E&O, the traditional specified professions, the lawyers and architects that everyone knows about, but we also have you covered with the manufacturers, the contractors, the real estate developers, intellectual property or patent infringement, all of these lower volume niche products that some clients and producers may not know are available. We're up to date on those.
The latest edition of the M&A Risk and Review series reported on really the first half of 2022, and this report was very optimistic about the M&A landscape coming into 2023. You are arguably one of the industry's top D&O specialists. So when you think about a company who is about to be acquired or is about to acquire a company, What advice do you have for them to help offset their risk?
Well, it's true. Many of the situations that we're called in to assist with involve M&A from one direction or another, right? So the first thing to keep in mind is these are all claims-made policies. So with a claims-made policy, you have to address the situations that may have occurred before an M&A transaction as well as after the M&A transaction. So if you have one company buying another, you have 4 different areas of exposure. You have the buying company's pre-acquisition exposures and their post, and then the acquired company's pre and post. So there's a lot of different things to think about right there. If you have a company that's being acquired, if they have a D&O program in place, typically you put that policy into runoff to cover all of their exposures arising from their acts committed prior to the acquisition. But sometimes these companies never had D&O before. So we could come in and write just a runoff policy only, which is not that easy to do, but this happens. If you're working with the acquiring company, now you have a decision to make. Do you want to add the acquisition to the acquiring company's policy, which is more typical, or would there be a justifiable reason to take out a separate policy for them? There are also situations where, along with the acquisition, multiple different entities are created, certain temporary special purpose entities, and you have to decide which policy to add those entities onto. And there's different ways that can be handled as well. The other thing that you want to think about in all of these situations is the possibility of a representations and warranties policy, which is a one-time policy that you would put into place that's specific to the transaction. This is a policy that does not replace the D&O policy. It would be complementary to the D&O policy. And typically what will happen with the reps and warranties policy, at the risk of oversimplifying, if your D&O policy is going to cover claims by shareholders against their own management team that arise out of the acquisition, the reps and warranties policy is going to cover claims by the acquiring company against the acquirer, against the acquisition, or in some cases the other way around. So your D&O policy has a breach of contract exclusion, whereas your reps and warranties policy is specifically covering breaches of contract in a certain sense. So these are all different things to think about that we try to guide our clients through.
When a retail agent is coming to you to discuss the risk exposure of a client, knowing that either an acquisition is imminent or being acquired is imminent, is it common practice for them to understand all of those various nuances?
I would say oftentimes we had a lot of value to the transaction. We had an awful lot of value. And even if you have a producer or an internal expert at the retail level, they may only have 1 or 2 people in the firm that are familiar with the account. And at some point, they're going to want to hand it off to an account executive or to a placement team. And at some point, the expertise is going to drop off. And that's where we can really help out, because we could really hold the hand of the account executive throughout the entire process. So we do add a lot of value in that. And we're very involved with conference calls, video meetings, and in-person meetings, always alongside our retail producer with the client as well to guide them throughout these situations.
Just true consultative approach is required in order to
exactly
fully navigate the extent of these risks.
And we're eager to do that. Yeah.
Another area that you really specialize in are financial institution risks. And we've talked a little bit about how really financial institution risks are not created equal. And there is sort of a misconception sometimes with retail agents thinking that they are. Talk to us a little bit about financial institution risks and what agents need to be aware of in terms of making sure that they're properly covered.
Sure. The brokerage of financial institution and financial services firm risks is a little bit different because there are many, many different specific products, kind of like what we talked about in the E&O world. In the D&O world, you have your nonprofit D&O, your private company D&O, your public company D&O. Those are really 3 products. And then you tailor those policies via endorsement to the individual client. But there's really only 3 products. In the financial institution world, each class of financial institution has its own product. For example, a bank, a hedge fund, a venture capital firm, an insurance company, for example, and the list goes on. And then you have the fun category of the miscellaneous financial services or the diversified financial services, where they're doing things that either blend the exposures or they're kind of unique and they don't fit any of those products. So the challenge that you deal with here is the submission requirements for each of those classes is very different. You're typically dealing with a different underwriter. It becomes very, very specialized at the insurance carrier level, where you would find A bank underwriter might underwrite banks for his whole career, and a hedge fund underwriter might underwrite hedge funds for her whole career. So it becomes very, very specialized. The financial statements of an insurance company look nothing like the financial statements of a typical corporate. The brokerage and the coverage requirements change. Sometimes you want to combine the directors and officers and the professional exposures onto one policy. Sometimes you want to keep them separate. So it is a different kind of a different world. And again, kind of with the M&A, we're very involved in working with our producers as they speak to their prospects and their clients. And I'd probably say that 2/3 of my in-person meetings with clients over the years have been FI-related meetings, just because that's where our retail broker wants us to come in and wants us to give that extra help. And we start early. We start meeting with the client before they even complete the application, because if you don't ask the client for the right documents up front, you're going to lose that client very quickly, because they're going to get solicited by the big brokers out there who have specialized FI teams at the retail level.
So what you're talking about really speaks to the Jencap advantage and why retail partners get so much value from working with us. So outside of the D&O policies, the E&O policies, even these financial institutions, talk about the way that Jencap's professional lines practice is set up, and really what we can do to help our retail partners.
At Jencap, we've really started to feel over the last few years the real power of size. But it's not just size, it's the fact that we really do collaborate across the country. And another producer wouldn't be afraid to ask me for my input on a financial institution client. And I'm certainly not afraid to ask someone else for help if it's something that I don't see come across my desk every day. We have all sorts of industry specialty verticals, and we have specialists in healthcare and specialists in environmental. And of course, we collaborate closely with our property casualty folks as well, because their policies and our policies need to sometimes be closely aligned. We have great teams. We have great teams. We have an excellent class of account executives coming up, and then another class of junior account executives coming up behind them. And because we have that, we're able to have the small business, the everyday business, get transacted very, very quickly. And it allows the more seasoned producers to work on the more complicated business and actually spend the time with the retail brokers and spend the time doing the marketing and joining the meetings and doing the value-added services that we've always wanted to provide.
Mike, thank you so much for joining us today. It is incredible to hear you talk about the areas that you specialize in, and it has certainly proven to our retail partners why they should be working with Jencap on some of these more complex risks. So very, very thankful to have you.
Thank you so much.
On our team. Unfortunately, our time is up, but I appreciate you listening. Flip the Cap is the insurance podcast where insurance insights flow and trending topics are always on tap. I'm your host, Kathryn Smith, and I'll see you next time. Cheers.